So let's take the hypothetical here that we have an Iranian attack on Saudi oil fields again, or some such thing, and or Iranian fast-spoke attacks in the Persian Gulf or the Straits of Hormuz on global tankers. The guess is that obviously will cause volatility in equity markets. It will cause volatility in global petroleum markets, some rise in oil prices. It's not clear that there would be the type of rise in oil price that would be extremely hurtful to the global economy based on the limited amount of oil that comes from that area and the fact that we could pump oil elsewhere. So again, there's no cataclysmic scenario that I think we're contemplating there. But in terms of this pathway and getting back to real estate, the pathway is the VIX pops up in terms of a higher level of equity market volatility. That higher level of equity market volatility has to do with uncertainty about a military tit for tat. It has to do with some disruption in oil supplies, potentially. It has to do with just uncertainty about the pathway of White House policy or of Iranian policy, and all those factors begin to seep into an equity market, which is already, in the words of some equity analysts, priced to perfection. In other words, stock prices are high relative to historic precedent, and they're very high relative to precedent now. So people are wondering how much higher they have to go relative to the downside risk. Well, we just have a new fundamental downside risk here. So how does that work? Again, well, we could have some correction in the stock market that creates some downward adjustment in wealth. We could have that coupled with a cyber attack or a real terrorist attack that again creates high levels of volatility, again creates adjustment in equity and fixed income markets that are negative, that ultimately over some period of time with some transmission feeds into the real economy. In other words, feeds into the creation of GDP. And as it does, it potentially affects those who lease space in major office buildings, or those who take vacations in major lodging projects, or those who are thinking about buying a house, or those who shop in retail centers, or whatever it happens to be. And as we see net operating income of any of those projects begin to ease, there are property valuation implications.